Hello, my name's Steve Margison, author of the book on Forex trading. In this video, and this series of videos in fact, I want to introduce my new indicator, the SM Squeeze Indy. This video is part one of that series. The squeeze, in my opinion, is the best way to get positioned for the big market moves. Its full name, some of you may have heard of, is the Bollinger Band Squeeze. So my SM Squeeze Indy tells you when a market is transitioning from low volatility to high volatility. In other words, it tells you when the market is going to switch from an oscillating sideways market to a trending market, and vice versa. As you know, the markets spend a lot of time in trading ranges, maybe 70% of the time, building up energy for the next major move. By the time the move fires off, it's usually out of the blue and violent when we least expect it, leaving many day traders behind. The markets never break when they're expected to. I mean, how many times have we been caught out? Even gone for a cup of tea or gone to the loo when the market's broken. And they will do so only when they are good and ready, and when the greatest number of traders are unprepared. So as traders, we need to be positioned ready for when the market volatility increases. Well, for when the market volatility increases, we need to be prepared. The SM Squeeze Indy helps us to be prepared for a market move. Now, volatility can be measured using Bollinger Bands and Keltner channels. Now, don't worry about these. You don't even need to know how they work. I don't know how my car engine works, but as long as I get in my car, turn the ignition key and it drives perfectly, I'm not worried. And I would suggest you do the same. But I've put a little chart on the screen here. The red bands are the Bollinger Bands, and the yellow ones are the Keltner channels. Periods of low volatility, sideways markets, are identified when the Bollinger Bands move closer together. See here, you've got an uptrend. This is a daily chart, Aussie dollar. We've got an uptrend here, and the Bollinger Bands are far apart. But look, when we get a sideways market here, the Bollinger Bands become flat and close together. That's low volatility. And it's high volatility when they move further apart, as in here on this downtrend. How do we know, though, when the bands are narrow enough to qualify as low volatility? In other words, what's narrow and what's not narrow? Here you can see the Bollinger Bands are close together and narrow. So the answer to this dilemma is during periods of low volatility in sideways moving markets, Bollinger Bands will contract to move inside the Keltner channels. Now you can see here the Bollinger Bands move inside the Keltner channels, and then they move outside again later when volatility picks up. Look here, the Bollinger Bands move inside the top one anyway, moves inside the Keltner channels, low volatility. So that's how we measure it, when the Bollinger Bands move inside the Keltner channels. That is our measure of low volatility. That's our starting point. The markets are now taking a breather, maybe a big breather, building up steam for their next move. The signal to trade is when the Bollinger Bands move back outside the Keltner channels, like here, here, here. We then need a momentum indicator to tell us whether to trade long or whether to trade short. Putting the Bollinger Bands and the Keltner channels on charts can do this, but it looks messy. I mean, look at my chart. It looks messy. Which is why I had the SM Squeeze indicator made, and this is the indicator at the bottom. Now, so the indicator is called the SM Squeeze Indy, and it shows red dots here, look at the bottom of the screen, it shows red dots when the Bollinger Bands are inside the Keltner channel. I've put two red lines to make it easy for you. Bollinger Bands inside the Keltner channels, in other words, red ones inside the yellow ones, but we don't need them on the chart if we use the SM Squeeze Indy, because all we need is the red dots. Now a squeeze fires off as soon as the dots go from red to green. Green dot tells us the Bollinger Bands have come outside the Keltner channels. Take a look here. And volatility is increasing. Get ready to trade. Now the momentum indicator tells us whether to trade short. You can see red for short. Or whether to trade long. A turquoise histogram would suggest a long trade, and a red histogram where the red dots turn to green would suggest short trade. The SM Squeeze Indy will work well on all time frames. It's very useful on higher time frames because, for instance, if a squeeze fires off long on a 1 hour chart, it would prevent me from taking trades short on lower time frames until that squeeze is played out. Likewise, if a weekly squeeze fired off, I wouldn't trade short trades. Well, if a weekly squeeze fired off long, I wouldn't take short trades on the daily or 4 hour charts. I wouldn't go against the squeeze. Also, as a day trader, I've learned one golden rule if I'm trading lower time frames. Never fight the 5 minute squeeze. So let's have a look at this chart. Aussie dollar against the US dollar daily chart. Now you can see from 16th of February till the 11th of March, that's that gap there. The market is in low volatility, build up energy for a major move. It's a long time. Look at the red dots. Now the green dots come on 11th of March. This is this year. And it's a red histogram suggesting we go short. If we went short there, we'll make this approximate, 105.40. Then we could have got out at 103.30 something. There's 200 pips there. But if we stay with the trend, this is down at 102.40. 300 pips. If we stay with the trend, that is a good squeeze. In fact, you've got a second squeeze halfway through that you could have gone short on as well. Then we got consolidation again. We got low volatility. The red dots showing the Bollinger Bands inside the Keltner channel, and then it broke. This was 17th of April to the 5th of May. 5th of May, it broke again to the short side, and a short trade there would have been worth several hundred points, as you can see. Moving the chart to get more up to date. I haven't put a line here, but let's do it. We've got some low volatility here, and again a squeeze to the downside. If I can move this thing. That's 28th of August, and it's a good little move. You go short at the low there, 103.97. That's just under the 104 mark, and it goes as low as 101.47. 250 pips, and that's 3 instances this year taking every squeeze. Right? Aussie dollar daily chart. You can work on any time frame. So let's have a look at some lower time frames. This is my gold 1 minute chart. It works, yes. We've just seen a daily chart, and now we've gone to a 1 minute chart. If you're a scalper, the squeeze is excellent. You see this squeeze that went off about 3:30 this afternoon. I'm not going to go through my other indicators until part 2 and part 3, video 2 and video 3, because these help me. These other indies help me to confirm a squeeze trade. If these other indies aren't in alignment, I won't take the squeeze trade, and 80% to 85% of the time I will be successful. We can see the squeeze here, and we get a good run up in gold. If you'd taken that about 124, 17.25. It got as high as 17.29. That's 40 pips, isn't it? That's a good trade on gold. We had another one earlier in the day. I've marked this for you as well. And this video is getting long, so I'm going to need to make a move here. You can see here, squeeze fired off. What time was it? 9:01 this morning. And might have been worth 20 pips, which is good on the 1 minute chart. In the future, further videos, I will tell you my settings and what take profits and stops I use. This is an introduction to the squeeze. Let's take a look today at the Euro dollar 15 minute. You can see there was a squeeze in the Asian session about 3 o'clock, a squeeze to the short side. There's my SM Squeeze Indy. And I mean, this was a superb short. Unusual for the Asian session, I must say, but we did get another squeeze to the long side this time, turquoise. We had 4 15-minute red dots and then it went green. And that squeeze would have been at about 127.87, 127.90. And you know, we've been to 128.30. It's 40 pips. Stay with it. Another thing on the squeeze lasts on a long trade as long as the histogram stays turquoise. As soon as it goes to blue, the squeeze is ended. Likewise on a short squeeze, while it's red, your squeeze is still in force. Squeeze on average lasts 7 bars. Sometimes it's 2 or 3, sometimes it's 9 or 10, but on average about 7 bars, and that's shown on both those squeezes. This one is a 5-minute squeeze on the dollar Swiss franc, 5-minute chart. You can see here, about 9:05. And it's continued to move down the rest of the day. And I say, if you're doing short time frames, never fight the 5-minute squeeze. If the 5-minute squeeze says short, don't take any long trades until that squeeze is played out. See, it played out after about 7 bars. And you don't always have to exit. You know, we know the market comes down, retraces, comes down, retraces. So use a bit of common sense. And then we get another squeeze here, an hour later, and the market continues moving down. One more, and then we'll conclude part 1 of this series. Euro Yen 5-minute chart. This is today, and today is 21st of November 2012. This is 10:55 AM. We're talking GMT. We've got a squeeze after 15 minutes of consolidation, 3 5-minute bars, and it's halfway through the trend today, but it still goes and makes some good pips. Maybe 50 pips there on a 5-minute chart. That's not something you're going to find every day. Again, I'll go through my settings in part 2. And you can see, really, if I move this along, we could have caught the trend earlier. There, 10 to 6 in the morning. There was also a short squeeze here, 3:15, 3:20 Asian session. And that was a good move down with a short squeeze. So I hope you find that useful. That's my SM Squeeze Indy. That's just coming out onto the market. Final recap, a squeeze usually lasts about 7 bars. I've been through that. So finally, ready for part 2. You can't just take every squeeze blindly as it comes. You know that. You can't take any setup blindly as it comes. You still have to look at the time of day, the daily range. In other words, how far of the average daily range have we had? Support and resistance, and other things. I'll go through these things in part 2 and part 3. I have supporting indicators you can see on my screen that supports or denies my squeezes. Okay, this is Steve Margison, www.sm-forex.com, and I'll see you in part 2.